Welcome back, Focus Learners, to today's Explainer. We are setting the stage right now to peel back the layers of the absolute biggest brewer in the world, Anheuser-Busch InBev. We're going to break down the major developments currently shaping its story, and we'll be using publicly available data from August 2026 to do it. Real quick, as always, just a reminder that this educational breakdown is strictly for informational purposes. It doesn't constitute financial advice. We're just here to look at the facts, understand the strategy, and honestly, learn how a global giant navigates a rapidly changing market. Here's a quick look at our agenda for today. We're going to cover Q2 2026 financials, driving the growth, the digital beer ecosystem, strategy and market news, and finally, analyst views and risks. All right, Section 1, Q2 2026 financials. Let's jump in. Okay, $16.66 billion. Just let that number sink in for a second. That massive figure is AB InBev's second quarter revenue. It represents an organic year-over-year increase of 5.6%, which, notably, actually beat analyst expectations. But you know what really stands out? Their profitability. They saw this incredibly impressive 23.4% jump in underlying earnings per share, hitting $1.21. They significantly surpassed the consensus estimate there, which was sitting at $1.12. Now, beyond just the raw dollar amounts, this metric right here is a huge milestone for them. After several years of intense pressure on the actual amount of product moving out the door, total volumes actually rose 0.9%, with beer volume specifically up 1.1%. And this brilliantly illustrates that their premiumization strategy, it's working. With revenue per hectoliter climbing 4.2%, it's clear they are successfully encouraging consumers to trade up to higher margin premium products. So they aren't just selling more liquid, they are actively selling more valuable liquid. And this growth wasn't just isolated to one lucky spot. It was driven by record second quarter volumes in key geographic markets. Specifically, we're talking about Mexico, Colombia, and Ecuador. This really proves their global footprint is a massive asset that lets them gain market share efficiently. Because of this really strong performance, which, by the way, pushed their first half 2026 reported revenue to nearly $32 billion, up 11.5%, management gained the confidence to reaffirm their strong full-year EBITDA growth outlook of 4 to 8%. Moving on to Section 2, driving the growth. So what's really fascinating here is the explosive international growth of their global megabrands. While their combined revenue has increased 6.2% overall in the second quarter, the growth outside their home markets is wild. Corona is up 17%, Stella Artois is up 19%, and Michelob ULTRA absolutely surged by 21%. Michelob ULTRA has actually become America's top-selling and fastest-growing beer, but remarkably, 40% of its second quarter volume growth actually came from outside the United States. Now, if you've noticed way more alcohol-free options at your local store lately, well, this is why. The second engine here is a huge global growth story: no alcohol beer. According to a new white paper from Ipsos and IWSR, no alcohol beer absolutely dominates the non-alcohol beverage volume. It commands a whopping 93% market share. That makes it more than 30 times larger than any other category in that space, and AB InBev is perfectly positioned to capture this. Their non-alcohol beer revenues climbed 27% in Q2, primarily led by the huge success of Corona Cero and Michelob ULTRA Zero. To kind of ground all these soaring numbers in basic human connection, CEO Michel Ducrest pointed out that no matter who you are or where you live, when someone says, "Let's grab a beer," you know it means something more. It's about culture, it's about community, but importantly, grabbing a beer today often means reaching for something entirely different. The company's third growth engine, their Beyond Beer portfolio, which includes ready-to-drink beverages like Mike's Hard Lemonade and Cutwater, saw its revenue surge 44% in the second quarter. Cutwater specifically showed literal triple-digit growth. Section 3, the digital beer ecosystem. Let's shift gears and see how this all builds into an entirely different realm. This is the BEES Marketplace. It's a proprietary business-to-business platform that is fundamentally transforming how retailers actually order and manage their inventory. By utilizing artificial intelligence, AB InBev executes its commercial strategy directly with its partners. This digital infrastructure is rapidly becoming a profound competitive advantage for them. You see, it's no longer just about making beer. It's about owning the technology platform that connects the product to the shelf. And maybe most importantly, this business is already EBITDA positive and cash positive. To give you a real sense of the scale here, the gross merchandise value of third-party products flowing through the Bees platform grew an astonishing 50% in just the second quarter. It hit a $1.2 billion mark. That is a staggering level of digital commerce volume for what we think of as a traditional brewing company. Section 4. Strategy and Market News. So, what are the physical moves backing this up? On August 20th, plant manager Ashley White announced a $13 million investment in the Baldwinsville, New York brewery. This capital is being deployed specifically to expand the production of those high-growth brands we were just talking about, Michelob ULTRA and Cutwater, all while upgrading their can and bottle lines. It also helps fund one of 15 new technical skills training centers being established nationwide. And all of this is framed within a much broader, massive $600 million Brewing Futures initiative dedicated to bolstering U.S. operations across 2025 and 2026. On the marketing front, ahead of International Beer Day in early August, the company rolled out their global Cheers to Beer campaign. They created this in partnership with the highly acclaimed agency Wieden+Kennedy. It's a global brand film that celebrates beer's cultural role in bringing people together, and it heavily showcases their core portfolio across Budweiser, Corona, Michelob, and Stella Artois. In corporate moves, early August brought some pretty notable news regarding a few of AB InBev's historic founding families, the Van Dam, DeMevius, and Despel-Birch families. Through their investment vehicle, they actually sold a €731 million stake in the company. They offered about 10 million shares, which is roughly 0.5% of the outstanding shares, at a price of €73.10 apiece. As a result of this block trade, which was priced at a 2.8% discount, the stock did experience a brief slide of about 2.5%. But contextually, this is just standard market mechanics, right? The sale came after AB InBev's shares had already surged significantly at the start of 2026. So making this move was totally expected. It's just an impartial profit-taking move by longtime stakeholders, rather than any sort of fundamental shift in the company itself. Section 5. Analyst Views and Risks. Looking at the consensus from 11 analysts polled by S&P Global, the stock holds a really solid buy rating with an average price target of $97.03. That suggests about a 23% upside from current levels. Firms like Evercore ISI, Goldman Sachs, and Wells Fargo have maintained or even raised their buy ratings recently. And what analysts are specifically praising is the company's highly diversified portfolio, spanning core beers, premium labels, no alcohol, and those beyond beer categories. It basically positions them to capture demand across almost any consumer occasion you can think of. So the crucial point for us is how all this growth actually translates to valuation. Right now, AB InBev is trading at a forward price-to-earnings ratio of about 17 times. Now, while that is slightly above the pure brewing industry average of 15x, it's significantly below the broader beverage peer group average, which sits way up at 26 to 27 times. Recognizing this value, Zacks Research recently raised their full-year 2026 EPS forecast to $4.43, and they are expecting a stellar year-over-year growth of 17.2%. But of course, no global operation of this scale is without turbulence. To make sure we maintain a clear and objective view, we have to ask the hard question: what are the biggest headwinds threatening to slow this momentum down? Well, the most prominent structural challenge right now is the Chinese market. It is a stark reality. In the second quarter, volumes in China dropped 9.7% and revenues fell 8.8%. This was heavily impacted by adverse weather, a highly constrained consumer environment, and continued weakness in on-premise sales, like your bars and restaurants. Across the board, global recovery remains slightly uneven. Furthermore, we can't ignore that the company still carries a significant debt load, although to be fair, it is worth noting their net debt to EBITDA ratio has slowly and steadily improved to 2.86 times. And that brings us to the ultimate question we have to leave you with today. With massive digital innovation through the Bees platform and a highly successful premiumization strategy actively combating those harsh regional headwinds like we see in China, is the world's largest brewer pivoting fast enough to secure its future dominance? Their remarkably strong Q2 performance and these strategic multi-million-dollar U.S. investments absolutely position them for an incredibly fascinating future. But the global chessboard is always moving. Think on that, focused learners. Thanks for joining us for this explainer, and we will definitely see you next time to dissect the next big data set.